thought leadership from PwC.
The key thing I would say is you don't want to let perfect be the enemy of the good. I think there's a real sense of urgency here. I think with nature, it's happening right now, and we're sort of seeing the effects of that, and it's exacerbated by climate change as well. And so, the best thing to do is, to get started right away, to start the iteration process, to try to start understanding what information is needed.
Hello, today we're back talking ESG. This time covering the launch of the Taskforce on Nature-Related Financial Disclosures, or TNFD framework. This is PwC's Accounting Podcast. I'm Heather Horn, and thanks so much for joining us today. According to a report jointly issued by the World Economic Forum and PwC, up to 58 trillion, or approximately 55% of global GDP, is highly or moderately dependent on nature. One organization, TNFD, is coalescing the business community around the need for increased transparency and understanding of how businesses have this dependency. Following a similar framework as the TCFD, or Taskforce on Climate-Related Financial Disclosures, the TNFD is focused on providing organizations with the tools to act on evolving nature-related issues. The TNFD recently launched its final framework on September 18th, 2023, at the start of New York Climate Week. To unpack what's in the framework and talk about the status of how companies are managing and disclosing nature-related dependencies, we asked Dan O'Brien, who leads PwC's Sustainable Business Advisory Solutions practice in Western Canada, to join the podcast. Dan's also a member of the TNFD, so can give us unique perspective. So Dan, welcome to the podcast. I'm so excited to have you on and especially excited for our topic today. But before we get into the details, can you just share with the listeners a bit about your background and maybe starting with what you're doing at PwC and then the work you're doing with the Taskforce on Nature-Related Disclosures?
Yeah, thanks, Heather, and very good to be here as well. So I've been with PwC for about 15 years now, and I have kind of a somewhat unique background in that I've come more from a science background. I've studied ecology and done a fair bit of research and work in that space. Over the years, I've worked with companies in environmental risk, understanding how they can manage that risk, and then shifting now into sustainability and reporting around sustainability. A couple of years ago, I was asked to represent PwC on the TNFD as a task force member, and my role has been to sort of bring insights from what we see in industry and our clients, but also one of the areas that I've been focusing on is sort of the interface between sustainability and technology, and so that put me in a good position to lead the working group on data and analytics. So we've been advising on some of the challenges and issues around nature-related data, what's out there, how these different tools and data sets can be used. And we also stood up what's called the Data Catalyst Initiative, which brought together I think there's about 140, 150 data providers that we're bringing together with industry to sort of understand what the use cases are, where there's challenges, and kind of signal to the market where there's a lot of opportunity in this space.
All right. Well, definitely very interesting. And biodiversity is a topic that we've talked about previously on the podcast, including a series we did in the spring. But I'm sure that notwithstanding those discussions, many of our listeners are wondering if we made a typo and if we're actually, not talking about TNFD, but talking about financial climate risk. And so can you sort of distinguish how TNFD was formed, what really its mission is, and then obviously some of your involvement as well?
Yeah, well, I can assure you it's not a typo. The N is for nature. And maybe just to start off by sort of explaining kind of what the concept is around nature and how it's being defined. Biodiversity, which is a common term that's used almost as a proxy for nature, is a subset. So it represents diversity of life and diversity of ecosystems, which is really an indicator of the resiliency of ecosystems that we depend on as a society. But nature is all encompassing. It encompasses the climate. So in a way, climate and climate change is a aspect of nature. It's also the fresh water, the oceans, the land, all of the natural environment that we depend on. And I think the reason why TNFD was established was there was a recognition that we're starting to get to a point where we're seeing some of these so-called planetary boundaries that represent these natural systems. These boundaries are starting to become exceeded, and we're getting very close to these tipping point scenarios where these systems they could start to break down. And we did some work with the World Economic Forum a few years back and have recently updated that work where we looked at the dependency of our economy, our global economy on nature, and found that more than half, or $58 trillion worth of economic activity is materially dependent on nature, meaning if these systems start to break down, it'll result in significant financial impacts. And so I think the capital markets, financial services are starting to wake up to this and understand that there's a significant risk here, but there's a lack of information, right? So the TNFD is really about providing a common framework for organizations to better understand their interface with nature and to assess risks and opportunities so that they can effectively communicate in a way that there's consistency and meaningful information that investors, that banks, that lenders can utilize that information to understand how to allocate capital towards nature-positive businesses.
And if we look then at where sort of your efforts stand, where are we in the cycle in terms of the TNFD and what you're doing?
Yeah, well, this week we're here in New York at Climate Week, and very excited to say that they launched the version 1, so the final version of the TNFD this week. But it's been a fairly long journey. They took a kind of an iterative approach to develop the TNFD, and it was initially established as a market-led initiative, meaning that the Taskforce members, the ones that have significant input into the TNFD, are made up of financial institutions. They're made up of corporates and professional services. So the idea is that let's develop a framework that is actually can be applied and can be utilized by businesses. And so they took an iterative approach. They released 4 beta versions beforehand. And each time the beta versions were released, they welcomed feedback and input from the market in terms of what's working and what's not. And I think David Craig, the co-chair, had done a back-of-the-envelope calculation and estimated almost 400,000 hours of time that went into the development of this framework in terms of companies that were piloting it, providing feedback, and the task force members. So, it represents a significant amount of effort from the market to develop a framework for industry to report out on nature.
So if I think about TCFD, and many of our listeners will be very familiar with that. And in fact, actually, I also recorded this morning an audio of our publication that's talking about the California rules requiring TCFD disclosures. And in that, there are the 11 recommendations that TCFD has across the different pillars. What is sort of the equivalent that you are seeing in TNFD? And obviously, people need to read the framework, but what are some of the highlights people should look for?
So one of the key design principles of the TNFD was to bring it into alignment with existing frameworks, including the TCFD. And you'll see that when you look at it, that the recommendations, all 11 TCFD recommendations are there. Change the word climate for nature, and you'll see it's there.
Yeah.
There's also an additional 3 disclosure requirements, which one is around engagement with stakeholders, ensuring that you're taking into consideration Indigenous people, local communities, and affected stakeholders when you're looking at nature issues and assessing risk. There's also a disclosure requirements around location specificity. So nature is very, context specific, very location specific, and so that's another aspect that's additional. But the recommendation is that if you're already reporting on TCFD, it shouldn't be much of a leap to integrate TNFD into your report, because you've probably got most of the structures in place around governance, around risk assessment. Is just adapting them to incorporate nature. So, that was a key design feature. you'll see that it also aligns really well with the ISSB S1 standard, for example, as well. So I think there's been sort of general acknowledgement that it aligns well with all of the reporting standards, the emerging regulations, et cetera.
So interoperability has been like a buzzword, obviously in the sustainability world, but something we spend a lot of time on here on the podcast. And so what you're saying there is this is designed to integrate and to be interoperable with the other standards that are out there. Is that a fair statement?
Exactly, yes.
So if I rewind then and think about, again, helping people sort of leverage their TCFD knowledge, I think there's a shorthand for climate. Well, if we reduce greenhouse gas emissions, then everything else will take care of itself. And you're able to quantify that. You look at relative numbers and otherwise. And nature feels more nebulous, but do we have any equivalent types of metrics that you would say are sort of core to nature, or does it really come down to more the specifics of an individual company and they're not necessarily comparable across companies?
Yeah, well, for those that are familiar with climate and climate-related reporting, there are similar concepts around mitigation and abatement and adaptation and resiliency, right? So, and if you think about it, climate change is an impact driver for nature as well. So, other types of impact drivers are degradation and land use change, over use of resources, invasive species, and pollution. So in the same way that you have abatement for climate in terms of reducing emissions, you're also, there's the reduction of the impact driver. So that might be reducing pollution levels, or it might be reducing land cover change or overuse of a particular resource, right? And then there's also on the resiliency side, similar, there's analogous processes there.
And then if I take a step back and think about the COP last year, that was in Montreal, and there's the 30 by 30 initiative. First, do you mind explaining to our listeners, big picture, what that is, and then how does that fit in here?
Definitely. And again, what you're referring to is the global biodiversity framework that was established at COP15 in Montreal, the Kunming Montreal Global Biodiversity Framework. So the same way you have the Paris Climate Accord for climate change, the GBF, Global Biodiversity Framework, kind of represents that global initiative where you have several hundred countries that have committed to these specific targets. So the 30 by 30, as you referenced, is a target around conservation of land and oceans, 30% by 2030. There's also a target around corporate reporting and financial institution reporting. And so now, the signatories of the GBF, they're going to have to start driving action throughout their economy. And the idea with the TNFD is this framework, also aligns with the GBF. So it'll hopefully help countries to assess and understand the extent to which the economy is aligning with the GBF and help them to communicate their progress on the goals that they've agreed to.
All right, very helpful. And then again, taking a step back, if I think you mentioned there are 4 beta versions before you put this out. Are there any particular aspects of it that you would highlight as being more contentious, or maybe that may be of more interest to our listeners just because maybe there's the more dynamic nature or otherwise?
Yeah, I would say one of the more contentious areas was the recognition that when it comes to nature, you can't look at nature without considering the indigenous people, the local communities, the stakeholders, the people who live in the area where nature is being impacted, and they're a critical component of the assessment. And so the TNFD went to great length to engage with these groups to understand how and what their concerns were, how they wanted to be engaged with and taken into consideration in this kind of an assessment. And so that particular disclosure requirement was originally, I think, in the strategy section, but it got moved up into governance to sort of recognize the importance of the governance around that process and how stakeholder engagement is factored into the materiality assessment approach. The other area I think that maybe not contentious, but there's a a recognition of the significance of it, but also the complexity and the challenge is the value chain aspect. So not just understanding your nature, dependencies and impacts and the risks and opportunities of your direct operations, but that of your value chain as well. And I think there's a huge, there's recognition there that that's going to be a challenge, because getting the data that you need to assess your value chain is going to be quite difficult. Although I think as more and more companies start to adopt the TNFD and start to ask for this kind of information, it will start to flow and will become available. So, the recommendation is, just get started. If enough people get started, then the snowball effect will kind of start to happen.
Critical mass, right? Momentum
Exactly.
for that. But it's very interesting you mentioned the value chain, because again, I feel like people, there's increasing recognition of the importance of the value chain, and we talk about human rights, human capital, and otherwise this is just another aspect of it. And as you talk to companies and clients about TNFD, nature disclosures, biodiversity disclosures, is there a sense of sort of, and I hate to use this word, but almost fatigue, like there's too much to do, this is just another thing on the list? Or where would you say this is in terms of how companies are thinking from a priority perspective?
Yeah, I think there is a little bit of trepidation that, oh no, not another framework
Right.
that we have to, another standard that we have to look at here. But I would also say that, a lot of companies that operate in the natural resources sector that are dependent, directly dependent on nature, this is actually nothing new to them. They actually have, a huge amount of information, and they are already, for the most part, incorporating these kinds of risks into their enterprise risk management, and they have management systems that they've established. And so for those companies, it's a matter of really looking at what they're already doing and, realizing they're probably 70 or 80% of the way there. And it's just adapting how they're talking about this, maybe putting in place some additional governance and processes to address the requirements, maybe calculating and reporting on some different metrics. But I think where it'll probably be quite a challenge is in financial services, right? There are already, recognition that certain sectors are higher risk, certain commodities, there's already issues around things like modern slavery and human rights issues. So there's sort of a number of these types of sustainability issues that are about understanding your value chain and where that risk lies, that I think the fact that they're coming sort of together at the same time will hopefully help to speed up the adoption by financial services. Because, if you're trying to understand the risk of child labor or forced labor in a supply chain or within certain clients, the process for understanding kind of nature risk within the value chain is somewhat similar in terms of the types of information you need to know, like who are the tier 2 and tier 3 suppliers, et cetera.
So if you think about that nature risk assessment, I think, you mentioned nature intensive companies. So for me, I would think about, beverage companies use a lot of water, agricultural companies use a lot of land. I mean, there's those companies, or maybe if I'm a garment company and so I'm relying on cotton or otherwise. But what if I'm maybe more of a services company, an office, I'll call it an office company. How are those companies thinking about this? Are you getting sort of a reaction of like, well, this is not an issue for me, or is this something that's impacting all companies?
Well, that stat that I quoted at the beginning, where we looked at the percentage of the economy that was material.
Yes.
Well, it's actually 50% that's materially dependent, but 100% of the economy is dependent on nature, right? So all industries, all sectors, to some extent, have dependencies, not necessarily their direct operations, but within their value chains. And so going through the process and kind of understanding what is material, I think will be, that there'll have to be some initiative to do that, to either say, yes, this is an issue for us, or it's not. And I think that consumer products companies, services companies will start to realize that even though there may not be direct impacts to them, there could be indirect impacts, right? I mean, a good example would be, the tourism industry. And if you think about hotel chains, right? what happens if the coral reefs that that all of their customers fly down to scuba dive and snorkel on start to die out, and all of a sudden, the asset there, the natural asset that they depend upon, is no longer functioning, right?
Yeah, it's a great example. Yeah. So if you think then just broadly about the nature risk assessment, any sort of starting point you would give, or what recommendations do you have as you're talking to companies, even how to approach this? You mentioned the value chain, but I mean, this is a very complex topic because it's very multidimensional.
Yeah, I think that the first thing to do is have a look at the LEAP assessment approach, and probably take stock of what you're already doing as an organization. Figuring out where do you have the information that's required, or do we need to find that information? And then, probably the area to focus on is the location information. So figuring out where, if you don't have that information already for your direct operations and your assets, getting that information, and then starting to look at your supply chain and figuring out to what extent is that information, the location information, available, right? I think the approach is meant to be iterative. I don't think there's an expectation that everybody's going to get this right the first time. It's also meant to really narrow down the focus. So it might be overwhelming at first to think, oh my gosh, we've got 30,000 suppliers, or we've got thousands of assets. How do we get a handle on this? There's some course filter assessments that can be done to figure out where are the hotspots that you should be focusing on initially. And so that might parse down the list significantly, so that you can then start to engage with those suppliers, or look more closely at those locations to better understand why it came out as a red on the chart, right?
And Dan, when you refer to LEAP assessment, I'm presuming that it stands for something. So can you share the acronym?
Yeah. So the TNFD disclosure framework has all the disclosure requirements and the metrics, but what they've also done is they've provided a fairly comprehensive approach for how you can conduct the assessment. And in effect, the idea with LEAP is to, first of all, scope your assessment to figure out what aspects of your business and your value chain you need to look at. And then the L stands for locate. So figure out where those locations are, right? And once you have the locations, and then the E stands for evaluate. And that's about understanding where the dependencies are and where the impacts are associated with those business activities. And there's two aspects to the location assessment. The first is to figure out where you have locations that are interfacing with sensitive ecosystems. And there's a number of criteria to assess, what are the sensitive locations. But then the other aspect is the material locations. So where you might have business activities or locations that are vulnerable to nature risk, the same way you might for physical climate risk, right? And then the idea is from that larger set of locations, to narrow it down to what's called priority locations, which are both the combination of the sensitive locations and the material locations. And then you get to the assess stage, which is the understanding what the risks and opportunities associated with those impacts are, and then starting to think, how is that material to our business, and how does that affect our business processes? What's the financial implications? So that it's really a materiality assessment approach, right? And then the P is prepare, and that's about how are you starting to internally communicate and talk about these issues with management, but then also to prepare external disclosures.
So you mentioned that this is an iterative process, and I think most of our audience is coming from a financial reporting background, and this idea of that, you might not get it right, quote unquote, the first time, but that's going to take time. I think it kind of gives people shivers because we are used to thinking about financial reporting and filing, your financial statements with a regulator or otherwise. And so as you're two questions. One is, as you're talking to companies about the iteration that's necessary, how do they react to the fact, well, maybe the first year you're not going to be able to deal with all 30,000 locations? What's the feeling on that? But then secondly, to be successful in this, who's typically involved? Do you have to have people like you who have that type of expertise, or is this something the controller's department can do, or, all different iterations, I'm sure, but any thoughts on that?
On the first question, it's important to recognize that the TNFD is a voluntary reporting framework, and the same way that the TCFD was when it was first introduced. So this isn't a regulation. It's not a specific standard. I think when the TCFD was originally introduced, most organizations were maybe reporting out on one or two of the indicators, right? The idea, I think, with this iterative approach is most organizations will sort of see a phased adoption where they will address certain parts of the framework and then outline what their plan is to address other aspects. If you look at the adoption guidance that was released with the TNFD, there's some survey results where they surveyed the forum members to get a sense for what the adoption rates might be. And I think, hope I'm correct with these numbers, but I think 70% of forum members said that they would be adopting TNFD with FY24, and then by FY25, that goes up over 80%.
Wow.
But not all of the indicators, right? And so, the expectation is that as the data improves, as companies get more comfortable with their internal assessments, then the disclosures will start to become, they'll extend their disclosures.
Yeah, I mean, and that definitely makes sense. So you're saying don't do everything a little bit. Pick a few things and address those and then build on that. And so if you do take that approach, are there particular places that, at least from your experience, it may make more sense to start? I mean, for me, governance seems like a good spot, but just curious, where you see companies sort of putting their toe in the water.
Yeah, and maybe to touch on the other point that you'd asked about is the kind of the expertise required. I think it depends a lot on the industry that you're working in. Most companies working in certain industries will have experts in this area that are already informing them about risk. Like if you're a mining company, you probably have biologists on staff, or you're working with consultants. I think for other industries like financial services, there are financial services companies are starting to bring on board people with this type of expertise to better understand these risks. But there's also this sort of coarse filter, fine filter approach that I've been often talking about, where there are global data sets, there are tools that you can do to sort of do the hotspot analysis and figure out, at a general level, what sectors are more or less at risk, or what geographies are more or less at risk. That type of analysis, I think, is obviously you need to understand what these indicators are telling you, what these tools are telling you. But it's a useful first step to understand where the hotspots are. But when you start to drill down and try to understand the interaction between what's going on in these locations, and is it going to result in the collapse of an ecosystem that we're dependent on? At that level, you probably do need to bring in ecologists or people who understand the underlying relationships.
All right. And then in terms of where to start, any particular recommendations that you see work best, or at least that you've seen companies use successfully?
Yeah, like I said before, if they're already reporting on TCFD, it's having a look at the existing disclosures and thinking about how you can integrate nature there. So governance is a great example. Like, do you have the appropriate subject matter expertise on the board? Are there management committees that are established to address nature risk? The other area that makes a lot of sense is to look at how enterprise risk is assessed, and are these topics being considered as part of enterprise risk management? The other aspect is looking at existing processes in a business, and where are these business processes interfacing with the kind of data that are going to need to be collected. Can they be better leveraged and changed and modified to collect the kind of information that's required to better understand this risk?
So it's an interesting point about data, and you actually started there. So I'm glad we're coming back to it, because would you think of this then as more qualitative or quantitative? And when you think about gathering qualitative data and measuring that, it's in some ways that actually seems harder than quantitative. So how do you think about those issues, particularly with your data sort of hat on?
Yeah, it's a really good question. I think one of the first things you hear from people about, when they're faced with looking at nature and nature risk is, that it's just, we don't have access to the data, right? But I don't think it's the challenge is that there is data. There is lots and lots of data out there. It's just, is the data relevant and is it the right data for the context, right? So, the data is going to be required to understand where you have significant impacts and whether those will translate through into risks. So the data are useful for kind of raising the flag and saying this is an issue. The qualitative disclosures are the company's response. So what are you doing about it? What's your strategy? Do you have a plan to transition or to increase engagement with suppliers or change procurement policies or other aspects? And so, I would say the data is the ability to sort of identify where you have significant risks or opportunities, and the qualitative is the response. So what are you doing as an organization around that? And this will be a bit of a challenge for for asset managers, for those that are trying to interpret this information, because they're going to have to read a lot of information.
Right.
They're going to have to crack open those reports and see, what are these companies saying about what they're doing.
And from your perspective, as you look at companies that are further ahead on this, are there any sort of best practices or even pitfalls that you could share that then someone who's maybe in an earlier stage should be thinking about as they're approaching these standards?
Yeah, I mean, the companies that we've been working with, a lot of them have been tackling this issue for a long time. I think certain industries have industry-related standards and frameworks that they're already adopting. If you take the mining industry, the forestry industry, there are existing certification schemes. And so for them, it's more about how do we leverage that existing management system or certification scheme and use it to demonstrate how we're aligning with the TNFD. I think other companies that have large, extensive supply chains, to a large extent have been looking at risk within their supply chain. But the challenge has been, we know the risk is there, but it's like, are the suppliers that we're working with, are they the ones contributing? And do we have an effective way that we can actually make a statement that we are, effectively de-risking our supply chain in that certain aspect? And so working out approaches for how they can make a claim that they have effectively, reduced nature risk in their supply chain is a challenge, right? And there's, there are some mechanisms to help facilitate that, like certification, product certification, and sustainability certification is a good sort of proxy for that. But there's other aspects, other areas where that doesn't exist, and so. That's probably a key challenge is how are companies going to be able to effectively demonstrate that their approach has effectively mitigated that risk.
Well, and I think that goes back to then the point you made about you need some momentum, you need more companies doing this, because then the overall, I'll call it world database of information will grow, and that should help with this issue. Is that a fair comment?
Exactly. Yeah. I mean, that's the intent of the disclosure metrics in the TNFD is to have some standard metrics, some global metrics, as they're called, that all companies will report out on if they're relevant. That way you can start to make comparisons across companies within a different, within a sector or within a geography. They're not going to be perfect, but they are, the starting point for starting to aggregate information and be able to look across a portfolio and understand, where in that portfolio there may be higher or lower areas of impact that should be a concern. But I think that the important thing about these disclosure metrics is, like I said before, you kind of have to crack open the report.
Yeah.
Like you have to look at them in context of the business. And there might be a tendency just to rely on these disclosure metrics. And that might be, leading people down the wrong path, right? You don't want to sort of create these sort of perverse outcomes as a result of relying on these types of metrics. There is a real need to understand the context.
Well, and again, I think that actually to relate it to something people may already be thinking about, it's kind of the point of you can't just look at a company's GHG emissions, because if all of their properties are located in a location that is severe fire risk or other natural condition type of risk, you're completely missing some of the impact of climate. You're only looking at maybe what their impact is, but not the actual risks impacting the company. And it sounds like you're saying it's the same type of thing. Don't just focus on these numbers, but look at the bigger picture.
Exactly. And it actually touches on another aspect, which is, aligning with the IFRS S1 standard, which is this kind of concept of aggregation. This is the expectation is that you'll have location-based disclosures, right? But, how are you aggregating those locations? Are you aggregating like for like, or are you aggregating, sites that are in water-stressed areas with those that aren't in water-stressed areas? Because, you may start to sort of dilute the information if you're inappropriately aggregating.
Yeah, it's definitely an interesting point. So the TNFD, as you said, launched the standards this week. So is that it? Or what comes next for the TNFD? Is it monitoring the reports, or what do you see as the next key step in the mission?
Yeah, so from what I understand, they're locking down the disclosure requirements, right? They don't want to change that because they don't want...
People need to have a stake in the ground.
Exactly.
Right.
But the shift now is really on enablement and market adoption. And so, there's been a lot of organizations, us included, that have been helping to develop sector guidance. And so you'll see a broad array of different sectors where there'll be very specific guidance on how you should interpret these requirements and the kinds of ways that you prepare the disclosures. So you'll see the sector guidance coming out. There'll be additional probably revision of some of the other metrics. So there's core disclosure metrics, and then there's the additional metrics. I expect that you'll probably see those updated over time. And then it's really going to be a lot about engagement and working through the industry consultation groups that have been established in different countries around the world to start trying to mobilize and get market adoption of the framework. The other area that, like I said before, I think there'll be a lot of focus on is on data. And the TNFD has commissioned a study on what a global data facility might look like, right? So is there a model where we can create a common set of standards and protocols for how nature-related data can be shared and accessed to better enable the assessments that are required?
All right. So any other thoughts for our listeners? Other things we didn't touch on that are important for this discussion?
Yeah, I think the key thing I would say is you don't want to let perfect be the enemy of the good. I think there's a real sense of urgency here that we don't have the same luxury of time as we might have had with climate. We've had
that
6,
we squandered
7 years.
in many ways.
You could argue that we squandered. Yeah. I think with nature, it's happening right now, and we're sort of seeing the effects of that, and it's exacerbated by climate change as well, right? And so, the best thing to do is to get started right away, to start the iteration process, to try to start understanding what information is needed, and not to be afraid to put information out there. I think that there's a general recognition that this is a difficult and challenging area. Nature is complex, and that not everybody's going to get it right the first time. So I think not being afraid to say what you're doing and to show that you are progressing on this topic, I think that will go a long way.
Yeah, I completely agree. And I know I asked you for final thoughts, but I do want to reiterate a point and ask a question, because you mentioned aggregation briefly, and you also just mentioned the interrelationship with climate and nature. And I do think this is an important point for companies. You can't look at either one of these in the vacuum. And so as, again, you kind of think about that and the relationship between the two of them, any thoughts or words of wisdom on how to think about that?
Yeah, I mean, if you're looking at climate risk right now, physical climate risk is all about location, right? And how these climate hazards are going to impact business. that's a great place to start, and to start thinking about integrating nature-related hazards or how these impacts and dependencies could translate into risks into that type of assessment. So that's a good starting point. One of the areas that may be a challenge is wrapping your head around scenario analysis. Like, how are we going to do scenario analysis?
Because now you have a lot more variables if you're doing climate and nature together.
And it's not like you can define, a standardized scenario, or at least that's what they're hoping to be able to do is to kind of put together a standardized scenario framework that everybody can align around. But right now, the guidance on scenario analysis is to sort of take more of a qualitative approach and sort of think about what could potential futures look like if, variable A or variable B happens, right? And then start thinking about, well, how do these actually affect my business? And then building that into the impact pathway analysis, right? So that'll help guide, your assessment of how the impacts will actually affect the business and the outputs of the business, revenue, sales, production, and allow you to start thinking about the financial impacts and the risk assessment. So it doesn't have to be quantitative initially. I think the important thing is to really understand what those impact pathways look like and what the potential impacts or financial impacts on the business might be.
All right. Well, Dan, you've definitely given us a lot to think about, and congratulations to you and your fellow task force members on hitting this important milestone, and definitely look forward to seeing the evolution and continuing the conversation. So thanks for joining me today.
Well, thanks for having me, Heather. It's been a pleasure.
That's our show for today. Tune in next week for more fresh episodes. So that you never miss any of our audio content, follow the PwC Accounting Podcast wherever you listen to your podcasts. And to stay up to date on all our latest accounting and reporting news, sign up for our newsletter at viewpoint.pwc.com. From Thought Leadership at PwC, I'm Heather Horn. Thanks for tuning in.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates, and they sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.